Welcome back to the channel. Today we're going to be looking at one of my favorite value stock. The stock tells you whether the economy is doing well or not. And I'm talking about Disney. Disney stock is up. Its Q3 earnings is out and it beats top and bottom. It's exciting to know that people are going back to the park. Disney is a kind of business that with its ecosystem, everything entertainment around it, people going to the park, the media business, and all sorts. Disney competitors are the like of Warner Brothers, Amazon, Netflix, and most of all that, HBO. But Disney has remained the leader in that sector and is doing well. Just beat its Q3 earnings. Let's have a look at details for Disney. One of the reasons why I like Disney, it's part of the Dow group of companies, and it's a value stock. Disney has been there. I've been to Disneyland, and I'm still going there with my kids. I know it's a value stock. It's a stock that, it's a company that you can see what they do and you can see their ecosystem. There's a lot going to Disney Park. When you go to Disney Park with your family, it's a lot of entertaining. Anyway, let's have a look at the details for Disney Q3 earnings. Disney revenue is 21 billion, while the EPS is 0.90 cents. It beat top and bottom. The media business is doing well. The entertaining is doing well. The park is becoming full. You're having a lot of people going back to the park again, which is exciting. It tells you about the economy. Let's look at the details of the earnings. Let's look at price action. I have some considerable amount of Disney stock, and I want to be able to have more. Sadly, I missed the bottom. If we are actually bottom on this, it's trading for around 112. I think it was 108 before the Q3 announcement. Disney actually went as low as around $95 or $98. It's not too far from there yet. So it's still at a position you can invest, but make sure you don't just buy Disney stock. Let's have a look at price action. Disney streaming subscriber growth blows past estimate as company beats on top and bottom. Disney posted better than expected result on both top and bottom line. That's on revenue and the EPS, bolstered by increased spending at its domestic theme park, meaning that a lot of people are coming back to the park. The park are full. People are beginning to have confidence. COVID is nearing zero. Zero COVID for now, so people have more confidence to go out. The economy is back on the track. On Wednesday, Walt Disney Company reported that total Disney subscription rose to 152.1 million during fiscal third quarter, higher than the 147 million analysts forecast. If Disney Plus subscriber growth is any indication, the rumor that the global streaming market is nearing saturation have been proven untrue because they are doing well and they are still seeing growth. On Wednesday, the Walt Disney Company reported that total Disney Plus subscription rose to 152.1 million during the fiscal third quarter, higher than the 147 million analyst forecast, according to Street Account. Street Account are agency who they analyze different companies' revenues and all that. At the end of the fiscal quarter, Hulu had 46.2 million subscribers. ESPN Plus had 228 million. Combined Hulu, ESPN Plus, and Disney Plus have over 221 million streaming subscribers. Netflix, long the leader in the streaming space, had 220 subscribers. That means they did better than Netflix. According to the most recently tally, Disney shares rose more than 6% after the closing bell. The streaming space has been in a state of upheaval in recent weeks as Netflix disclosed another drop in subscriber, and Warner Bros. Discovery announced a shift in content strategy. While Netflix expects subscriber growth to rebound, uncertainty has left analysts and investors wondering what the future holds for the wider industry. Also, Wednesday, the company unveiled a new pricing structure that incorporates an advertising-supported Disney Plus as part of an effort to make its streaming business profitable. During the fiscal third quarter, Disney Plus, Hulu, and ESPN combined to lose 1.1 billion, reflecting the higher cost of content on the services. On the streaming business, it's all about content. Netflix, ESPN, and all that. You have to keep providing subscribers with latest content. Disney average revenue per user for Disney Plus also decreased by 5% the quarter in the US and Canada due to more customers taking cheaper multi-product offering. Starting December 8th in the US, Disney Plus with commercial will be $7.99 per month. Currently, the price of Disney Plus without ad, the price of the ad-free plus will rise 38% to $10.99 minus $3 per month increase. Anyway, let's have a look at the investor relation and see more information there. Okay, this is on Disney uh, website itself. Their um, their earnings summary. Let's start from here. Revenue for the later revenue for the quarter and 9 months grew 26% and 28% respectively. Diluted earnings per share (EPS), that's the EPS, from continuing operation for the quarter increased to 0.77 cents from 0.50 in the prior year quarter. Excluding certain items, diluted EPS for the quarter increased to $1.09 from 0.80 in the prior year quarter. Diluted EPS from continuing operation for the 9 months ended July 2, 2022 increased to $1.66 from $1.02 in the prior year period. Excluding certain items, diluted EPS for the 9 months increased to $3.22 from $1.91 in the prior year end. Now look at this. We had an excellent quarter with our world-class creative and business team powering outstanding performance at our domestic theme parks. Big increases in live sport viewership and significant subscriber growth at our streaming services, with 14.4 million Disney subscribers added in the fiscal third quarter. Wow. We now have 221 million total subscription across our streaming offerings, said Bob Chapek, Chief Executive Officer, the Walt Disney Company. We continue to transform entertainment as we near our second century. Wow, this is a huge, long, big company. Um, with compelling new storytelling across our many platforms and unique, immersive physical experiences that exceed guest expectations, all of which are reflected in our strong operating result in this quarter. Let's have a look at the technical chart for price action. Here is the technical chart for Disney. Uh, let's start with the weekly chart. Um, Disney market capitalization is 209.23 billion. Shares in float is 1803.3 million. Shares outstanding is 1821.5 million. The EPS rating is 66. Uh, the earning stability is 60. 5-year P range is 14 to 229. P ratio is 32. Disney is selling at the P ratio is 32. Sorry. Um, these are the past EPS for Disney. The current The current one estimate end of 2022 and 2023 estimate. Disney is currently trading today, 23rd of August 2022, as $115. 52 weeks high and 52 weeks low. 52 weeks high is 187, and 52 weeks low is $90. Disney is trading minus 38% point six off 52 weeks high. Let's have a look at some metrics here, some other information. Owners, Disney funds own 30% of Disney, bank 2%, and insurance 1%. Checklist, you can see here that Warren Buffett, it actually passed 10 out of 16 checklists for Warren Buffett, and for Benjamin Grams, it 6 out of 13. And also for Peter Lynch, it's 5 out of 8. Let's have a look at some technical information. Disney is trading above 10 weeks moving average, but below 40 weeks moving average. Let's have a look at price action. As you can see, Disney was actually trending down until recent. I mean, we're still in bear market. We've seen bear market rally. I think the market, most of the stocks are actually got to a level of 50-day moving average. Now it's about the market is about to either touch the lower low again or deep pause. You know, when you breathe in, you breathe out, you breathe in. That's the okay. Now here you can see this is lower low, lower high, lower low, lower high, lower low, which tells you that the market was trending down, lower high, lower low. There's a period of consolidation here, as you can see. And this is the weekly chart. And then we have this lower low here, which we then have a period of bullish move. Now we are beginning to either come back down, to this level. Anyway, let's have a look at it on a daily chart. On a daily chart, it's pretty much the same. You can see that we have a lower high here, lower low, lower high, and lower low. We have lower high, lower low. We begin to have um, higher high. Okay, lower high. Then we have lower low here, but then we have a period of consolidation around here. Then um, there was this was the bullish move, but then we are, in fact, we are on a 15-day moving average. The 15-day moving average is sitting here as support as of today. Guys, be careful with Disney. It's a value stock. It's one of the Dow stocks. However, you still need to do your own valuation. Make sure you use the right your own metric. Do not just buy stock because you think the price has come down from 52 weeks high. You have seen the price action for Disney, and you have seen the details of the earnings. Now it is up to you. Disney is one of the Dow stocks. Do your analysis, do the right valuation, check what you can get, the return you can get from investing in Disney in the next 3, 4, 5 years down the line. Don't just accept you're doing a day trading. Don't just put your money here and there. You need to do this valuation, you need to do this analysis. Check the last 5 years PE. Check, whether they are doing buyback. Check whether Disney is reinvesting. Check if they have cash flow. Compare it to the other stock within the industry. I can tell you for sure, the other business competing with Disney, they only compete on the media side of it. Disney is in lot. The ecosystem of Disney is one of the things that actually makes it more valuable. Thank you for watching this channel. We continue to produce content that will support your investment journey. Please call again.